Alright, so let's take a look at how we go about calculating our 1090, our 10% now and 90% later. So we're just going to focus on these upper uh, few cells right up here in the upper top part of our Excel spreadsheet. Alright, so what I have here in the first three cells, I have put in my estimate of 30 visits per month. Now remember, this is a referenced cell. So my 30 is actually put in down here at the bottom, down here on my spreadsheet at C23. So in other words, if I change that to 40 and hit my enter button, it changes to 40 up here, and everything else, the whole spreadsheet changes based on that, right? So let's take that back and we'll send it to 30. Okay, so I'm putting my variables in, and I put that's on another tutorial on the variables, so you can take a look at that one. But looking at that cell at C4, you can see I just set it equal to C23. All right, the next cell down is a calculated cell. We'll come right back to that. And the cell below that is equal to, it's another reference cell, to what I'm setting my collections per visit to be. And so down here, I put in my collections per visit. And if I go down there and I change that to $200 a patient, you can see that dramatically changes my spreadsheet. Okay, so the $100 figure, where does that come from? That's one question. One is, if this is a spreadsheet that you're going to be using for your financial planning for your business plan, you might talk to other practitioners, if you have a mentor in the private practice section, and get some idea of what a kind of an average amount that they are collecting on their patients is. And $100, that's actually probably a little bit high. Some of this is going to depend on the part of the country as well, but it can vary $75 to about $100 on the average for a visit. Obviously, some are going to be more, some are going to be less, but it gives you a point that you can do some planning with if you know what your collections per visit is resting at. All right, so and we've just elected to say it is $100. All right, so if I click now on my 1090 cell, all right, so what's happening here in the first month? What's happening is I'm only collecting 10% of my income. All right, so if I'm getting $100 a visit and I've had 30 visits, I should eventually get $3,000 if I get my 100%. And yeah, keep dreaming on that. Okay, so what we're not even taking into consideration here is your no pays. Insurance was ran out. People just don't pay anything. So there's a percentage there as well that we're not addressing. Anyways, so at this point, we're saying in that first 30 days, I'm seeing patients and I'm collecting about 10%. So that's going to be the people's copays. Okay, so on $100, that's on $100 a visit, that's a $10 copay, for instance, or it might be the person who paid cash, or the insurance company that you were able to get collection from right away. Now, we've got this thing set out here at 90 days for collection. 10% now, and the other 90% at the end of 3 months. That time frame is getting shorter and shorter. I mean, you can talk to a lot of your clinics, and they're going to be getting paid a lot of times, in 2 weeks with electronic billing. So that's a tremendous improvement. But still, that 90-day time frame is rather important because that's what's called aging account receivables, and those are the ones, if you're going out beyond that 90 days on getting paid, you've got to pay some special attention to what's happened there and why you're not getting that money. So anyway, so here we have our income at 1090, and back looking at this cell, what I've set this equal to is equal to C4, which is my number of visits, times my collections per visit, times C6, times 10%. So I've just put in the 0.1. Right? So easy enough. So C4 times C6 times 0.1. Okay, the next month, in month 2, it's the same thing. It's just slid over 1 month. Now it's D4 times D6 times 0.1. Okay, so it's 33 times 100 in this case. Okay, month 3, here we are, E4 times E6 times 0.1. So just my number of visits times my collections per visit. All right. And now when it's going to change though here in month 4. So what happens now is if you look, these are my F cells, right? So if I scroll up to the top and look up here, I'm going to see if this will, yeah, this will highlight here for me. So I've got F4 times F6 times 10%. So that's just what I collected in this month times 10%. So 40 visits times $100 visit times 10%. But now what I have to do is I have to tell it to go back and get my other 90% from month 1. And I'm going to highlight this here. So that's my C4. So we're over here now. We're back over here, C4 times C6 times my 90%. And I just add those two together. Okay, so what seemed to be a little complex, that's a lot simpler, right? So I have that equation in there of my current month times 10% plus my month that's 2 months or 3 months previous, okay, month 1 times 0.9, and that gives me then, now you can see I've collected the other part of my $3,000 that I was due in month 1 plus what I made in this month. Okay. Once I have that set, let me come back up here and click on that cell. Okay, I can drag and copy that cell just right on across these other cells like this. Okay, so I could take and drag that thing and just bring it. Oops, there we go. Yeah, it's not really working real good in this little reporting program. But what you're going to do is copy that cell right on across as far out as this spreadsheet goes. All right, and that's going to give you your 10% now, your 90% in 3 months. All right. If you have any more questions on that, drop me an email. Okay, talk to you again. Bye.